So option cash machine, stock option training, education, of course. Um, so why stock options? The reason why we trade stock options is for literally several reasons. Mobility to trade from your iPhone or Android. I'm an iPhone guy, but whatever your phone is, you can trade mobily. It's affordable. Um, and we're looking for time freedom, financial freedom, and the degree of difficulty is easy. Well, it's not really easy. Like I mentioned, it's simple, rather. Simple and easy is a little different. And there's unlimited earning potential. And one of the most important things for me is to build capital to buy assets to create passive income for yourself, if you will. Let me explain what I mean by that, by these bullet points. Affordable stock options. As we get into this presentation, I'm going to show you it's like buying the stock at a cheaper price. Like if you wanted to buy Apple, I think Apple is trading at, I don't know, it's about 180 something dollars a share right now, I believe. Uh, Buying with the options, you're going to get the right to own the whole stock for a discounted rate. It's kind of like if you were familiar with real estate, it's kind of like getting some or any like type of investment. It's kind of like getting a wholesale price where you get to control the whole stock for a wholesale price. Like you're the middleman. You don't necessarily own the stock, but you have control of the stock. And with that control of the stock, you're able to make money as the middleman, essentially, because you get to control the whole stock, right? And that's where we are. We're going to be right in the middle, where we don't necessarily have to pay $180 for an Apple share. We get to pay, let's say a tenth of that. Essentially, usually it might, let's say it was $100, or not even $100. It'd be like 10 cents. And I'll go in details what that means in a minute. I don't want to throw you off. Um, okay, hold on. Now, trading rules to live by. Now, here's the most important part about trading is you want to have rules. Remember, I was telling you about principles, right? You're going to have principles, your own principles, and I'm have something I'm going to share with you as we get in more in depth as well. But these are the basic foundational rules to live by. You want to paper trade first and make your mistakes with fake money. Now, what do I mean by that? Well, once you open up your account, your Charles Schwab account, or what I Thinkorswim is what I use, or Charles Schwab, this TD Ameritrade. There's other different ones that you can use, but those are one that I use that I'm familiar with. But they all kind of have what they call paper trading, where you can literally they give you like $200,000, of fake money to trade and buy and sell stocks and shares with and options with, so you don't have to lose and practice with your own money. And that's one of the things that I recommend is the paper trade. Uh, Learn and understand how to paper trade. Okay. Learn and understand how to trade stocks by paper trading. Is what I meant to say. So you don't have to lose money while we're learning. And once we get to that point, you guys can start buying and selling right away using fake money, which is going to be cool. Um, Second thing is control your emotions and your fears. Again, you cannot predict the market. You cannot predict the market. No one can. Don't be greedy. It's one of the market is ran off of two things: fear and greed. And greed, the ideology about trading stock options is that you don't necessarily have to be greedy because the market is open all the time. You can, if once I show you a couple of strategies, you can always make money in the market, right? So it's always money available. One of the principles that I'll teach you um, is there's more than enough to have more than enough, and there's still more than enough left over. So you don't have to feel like there's a lack of money or a lack of opportunity. Um, Take what the market gives you um, by for following a strategy. And what we're going to talk about is having like an A1 setup. I teach you that like if this ain't your setup, there is no trade. We're not trading. No trade is a good trade because you get to keep your capital. All right. Now, here's an important principle that most people just overlook all the time, and I want to let you know right up front, like don't trade with money that you need. What do I mean by that? Well, if you're down to your last $5,000 for say, and you need that money to pay the rent or mortgage or what have you, and or whatever bills you got to pay, and it's like this or that, don't trade with that money. All right. So, whatever money that you have to trade with, make sure you don't need that money and you're okay with losing that money potentially. Right. So therefore you won't be having to have, that's one way that you can get rid of the emotion. Right. You don't necessarily need the money. It's like I may win, I may lose, but that's the kind of energy you want to have when you're in the market. Okay. And only trade up to 5% of what your balance is. So, and new traders, which you guys are, you should only trade with like 1% of your balance. So that means like if you have um $5,000 in your account that you're going to start with, you know, you guys should probably only trade with 1% of that, which is what, $500, right? So that way, you give yourself some room to, that you can lose and learn with, but you don't lose your capital. The idea about this is not to lose the money, it's to make money, and make it an additional income stream for you. Okay. And then more trading rules is always take small positions. We call it like, we as traders, we call it like a tester, right? So you want to test your risk before you make put your full investment in a strategy. And what we're looking for trends, we're looking for a trend. So you want to, like, for an example, maybe like buy one option, right? And make sure with confirmation that it's going the direction that you want it to go, rather that's going up, the stock market's going up or the stock market's going down, because if you go all in, you'll lose your money just as fast as you're trying to gain money if it goes against you. But you want to take a small position, just a tester, like, oh, okay, this is going my direction. Then you can add more contracts, is what they're called. You can add more contracts or more shares to give you more capital to hit your target. You want to obtain at least 4 to 5 positive confirmations before you take in a position. And I'm gonna get into that later in this presentation, what I mean by confirmations. So you want to have a confirmation of, like, you want to make sure that you have volume, meaning that there's buyers and buyers if you're going up, sellers if you're looking for it to go down. That's one confirmation. And you want to be able to have like a trend. That's another confirmation. You want to have that tester, and that's a third confirmation. And you want to make sure that it's depending on what type of indicators you have, and we'll share with you a little bit more about indicators as well to kind of help you confirm your bias before you take a position. You want to make sure you obtain at least 4 to 5 positive confirmations to make sure that you're on the right path, and it's not going to go against you. Okay. And
hey, can you go over those confirmations again, please?
Yeah, well, yeah, I'm gonna go over them more in a minute because you may not know what they are right now. So I'm just kind of giving you an overview of it. So, but they're simply like, it can be anything, but the ones that I want to share with you guys, to start off is volume, meaning if the stock is going up, volume represents buyers or sellers. So if it's going up, positive volume is bullish, or is the stock is going up. Bearish, or the stock is going down. Either way, you want to have buyers or sellers, or like I mentioned to you yesterday, supply and demand, right? So those are different confirmations. And like I said, I'm getting more into indicators in just a moment. Okay. And so as far as learning how to start off, I recommend starting off with one stock to master it before venturing off into other stocks. And the reason why that's significant is because you want to, like, kind of build a relationship with it. You know what I mean? Like, you want to know what this stock does. So, but you want a volatile stock. You want a stock that actually moves a couple of points per day, meaning, like, let's say if it were Apple, for an example, Apple's a pretty volatile stock and it's a pretty consistent stock. It might go up $3 to $4 every day, and it might go down $3 to $4 every day. So therefore, that's money for you every single day. There's other stocks like for an example, like a Netflix. Netflix is another one of my old favorites. It usually goes between $10 and $15 every single day. It either goes up 10 or down 10. So that's a lot of opportunity, for you to make some capital. You don't have to get the whole 10. You just need a couple of points. And I'll talk to you more about that in a moment. Okay, but it's vital that you master just one stock first before venturing out to others, because you get to understand, what that does, so you can stay singularly focused and get you profitable faster. Okay. And only trade companies with catalysts, so that so you would know and have a reason for its movement. In other words, like Apple, for example, you can look at Apple's company. You're following Apple. They just dropped a new AirPods. Or they just had some bad news. They missed their earnings report or something to that nature. And all of this stuff is free online, that you can find all this information as well. And I'm going to share with you sites that you can actually, find this stuff information as well. But you want to make sure you understand the catalyst. And this is where all your pre-work comes in at. Okay. Now, basically, this is the table of contents. We talked about how to find stocks, buying and selling options, indicator tools, and actually, we're not going to go into trading strategies and assets for today. We'll stop at the indicators and tools. Okay, so how to find stocks. You want stock research and resources. Here are a couple of sites. You guys can take a picture of this, a screenshot, although you will get this presentation as well. But here goes some sites. You got the NASDAQ, you got yahoo.com, or Yahoo, it should say Yahoo Finance, yahoofinance.com, Benzinga, Bar Chart, TradingView, which I introduced to you guys yesterday, and Stock Charts. Stock Charts, I think you have to pay for. All of these have a free version and a paid version. So yeah, but Yahoo Finance is one of my favorites. That's a free site. You can find a lot of information there. In fact, one of my favorite apps, these are some of the apps that I use. One of my favorite app is Market Watch app. And they give you updates, so you can pick your top 3 stocks or whatever that you want to watch. Rather, that's the S&P 500, Apple, and like I said, Netflix, for an example. And then StockVest, that's another app, but it's for iPhone, I think, only, and it's a paid app. So that's at your discretion. Just trying to give you all the information that's available. You don't have to have all of these. You don't have to use all of these, but these are, like I said, resources. And like I said, I use the Thinkorswim app, which is, I'd recommend you downloading that. I think it's still called Thinkorswim, but now it's based out of TD Ameritrade, which now is Charles Schwab. And in that app, they got a lot of local news in there for free as well. You can, once you start following your stocks, they give you updates on what's happening, which is it's just good information for you to have. Okay. So how to buy and sell options. Again, Thinkorswim app is my favorite. Whatever app is comfortable for you, you can use. Now, what is a stock option? Stock option gives an investor the right. Now, that's a key word. A stock option gives an investor the right, but not the obligation, to buy or sell a stock at an agreed upon price and date. And there are 2 types of options, which are puts, which is that you're betting that the stock will fall, okay? Or in other words, bearish. Or calls, which you're betting that the stock will rise, which in other words, you may hear the term bullish. And like I mentioned earlier, it's kind of like real estate wholesaling for stocks. You're buying and selling contracts. And one contract here's the ideology of how I like to phrase it for you. One contract is worth 100 shares. So if the one contract of Apple, I think let's just say it's $150, but I know it's like 180 actually. So let's say one contract to buy one share of Apple stock is $180, right? So, or one share, not a contract. One share of Apple stock is $180. But stock options, you have the right, not the obligation, to control 100 shares of $180 Apple stock. Okay. So so with that being said, you have the right to control that, and you only pay 1/10 of the price. And so it's like I said, it's like wholesaling. So 100 shares equals one contract of an option. Okay. And when we bind, I'm gonna show you in the Thinkorswim app where you can what that looks like. After we get off this presentation, I'll show you what that actually looks like. But I just want to make sure that you understand. One contract is worth 100 shares. So that's a note. That's a writer down, and you want to make sure you get that down. Okay, so when you open up the Thinkorswim trading account, here is a link right here that I have for that you can, it's a step-by-step how to get started with it, how to set up your account and all that things. So I'll send you this link, or you have this link to open up your TD Ameritrade account and start. Pretty simple. And if you need help, they got a really great customer service as well. But again, this video kind of shows you everything you need to know. Make sure when you're opening up your account with TD Ameritrade, this is key. You want to make sure that you answer the questions. They're going to ask you some questions, and you want to make sure that you answer the question so it doesn't seem like you're a high risk investor, or they deny your application. So if you have questions, just reach out. They have like I said, a chat for the assistants, and also here's a walkthrough, a video to activate your options trading. So one of the things that they're going to ask you is, like, for an example, is are you a high risk? And or they're going to ask you how long you've been trading. You might want to just say a year or something like that. Because you want to get approved for options. That's the key here. We want you to get approved for options so you can trade options. Now, to start your account, there is a minimum to trade, which is a $500 minimum to trade the options. You don't have to use the whole 500, but you do need it to start the account, right? You can still trade with $100 or $50 or whatnot, but to open a live account, you would need a $500 minimum to trade the options. Okay. Now, these are the two types of options. You got calls and puts. Calls are when the stock price is going up. In other words, you might hear, like in any other term, you might hear bullish or bearish. Calls are bulls, right? The stock is going up. So you want to pick a number that's higher than the current stock price. So if the Apple stock is at $180, you want to pick 181, for an example, on your option chain, and you're betting that the Apple stock is going to go to $181 versus going to $179, if that makes sense. So you want to choose the stock that's trending up, calls. For puts, which is bears and going down, you're betting that the stock is going to go down. So if the Apple stock is currently trading at $180 and your catalyst and confirmations is saying that it's going to go lower, so you want to pick a strike price that says $179, for an example. You're betting that it's going to go from 180 to 108 or 179. All right. So you're choosing the stock that's trending down. You want it to go down. Okay. So calls and puts are call up or put down. Right. So that's kind of how I use them to remember it. Call up or put it down. This is what it looks like. This is the option chain. And you can see right here on the left, this is a watch list. These are just some stocks that, that you can pick and choose to put on your watch list. I recommend just having a few, just starting off. But if you look at the one in the middle, that's SPY. We call it SPY. It's the S&P 500. And it kind of runs this particular one runs a little slower than the actual number of the market is called SPX, but we use SPY, especially for getting in and out of trades, because it doesn't move as fast, and it's kind of a lot easier to kind of manage and find out. It doesn't move as fast to where you can lose your money fast, but you can still make some money in this option. So I recommend having this on your watch list. And so I don't know if you can see, but on the side right here, this is going to be the option chain, which is on the next page. I think I can show you. Yeah. So these are what we call contracts, right? So you got calls on one side and then puts on the other side. But right here, these are what they call weekly contracts. So they open and expire, usually for a weekly, is they expire on Friday. So if today's Tuesday, you would get a contract that will, let's say, close. Now they have it to where they close on daily contracts. They used to only do weeklies. Now they do dailies as well. So the contract closed by the end of the trading period, right? So, and there's a couple of different strategies that I'm gonna make sure that you guys are aware of, so you can always make sure that you're on the upper end of uh, uh, safety for your account, right? Because you want to make sure that you always have the opportunity and time to have the greatest profits. So when you're looking at this options chain, don't let it mess up. Don't let it mess with your mind and think like, oh, this looks hard. It's simple once you understand what you're looking at. So we're gonna have the contracts, and the contracts are based on the dates. And you pick a date, and then you're picking, either a call or a put based on the side that is on. The left side is calls, the right side are puts. Call up is you're betting the stock is going to go up, and put down, you're betting that the stock is going to go down. Okay, and then once you get into your option, you pick a stock, and let's say you want it to go up. This is what it will look like inside your, once you pick the contract, right? So once you pick a contract, you get the right to own 10 shares or 100 shares of the stock. And this is what it's going to look like. And you're going to buy an option. And when you first start, it's like preset at 10 option 10 contracts. And I'll show you how to change that, where it can, you can just pick 1 or 3. You can pick 100, you can pick 1,000, and you can, but whatever that price is, like you can see here, this one, if you look to the left, the phone on the left, it says 19 cents. Do everybody see that where it says 19 cents right on the left phone, on the far left, under quantity?
Yeah.
It says 19 cents, right? So that's the price that you're paying. That's the price that you're paying. You're not going to pay for this particular stock $422.12. You would pay 19 cents per contract. Now, this example here is 19 cents for quantity, 10 contracts, which a cost of total trade is $190. See, that's what I'm saying. For $190, you have the right to control 10 contracts or 1,000 shares of the SPY contract at $422. If you bought 10 of those, it will cost you $4,000, right? $4,200. But with options, this is why options is so amazing, because you can have them own and control the same amount for only $190. And once you get that, you'll buy that, and you don't have to buy 10. You can buy as many as you like, but you will pay for it at that rate. And you will go to the next screen, which was the one in the middle. The second one to the left, the second one from the left, and it shows you. You will review it. You review your order, and you want to make sure you won't change anything else. Once you get in here, you would take your contracts. You pick your contracts. You pick your limit price, and you don't want to change anything else. Everything else is pretty set, pretty good. And you get to the fourth one, and this is the last page, is basically what it looks like. You'll go to your last review page, and you will hit review and send. And once you send that contract, it's live. But I wanted to note on this third phone here first, like you see where it says the quantity 1, and right beneath it, it's 19 cents. And then it shows you how much you're paying for that one particular contract, and the cost of trade there is $19. So you get to control 1 share of that particular stock that costs normally $422.12. You get to control it for $19, right? So that's the power of options, and you get to make a premium based on that stock moves in your favor. Okay.
So, question, Ron. So when you say on that third one where it's 1, is that 1 option at 100 shares or
correct?
Just 1? Yeah, okay.
Correct.
Okay.
Great question. So it's 1 contract, which equals 100 shares of the stock. So 100 shares of that stock would what you would normally pay $422 if you just bought shares of it, right?
Mhm.
So that'd be $4,000, is, approximately, right? But for we have the right to control 100 shares of that contract for $19. So yes, that is correct. Okay, and then yeah, so then the last one here, you would hit send, and then now that is live. And then as soon as it sends and it's live, you're either going to be making money or losing money based on, your position. Meaning, as long as you're positioned correctly, if you're positioned correctly, it's going to be going in your favor. Now, mind you, it's always up and down, but once you're confident in your confirmations, you should be all right. Now, this next thing, we're going to quickly go over these indicators and tools, and then we'll stop there and we'll review. Okay. So I think that a lot of people talk about they don't need indicators for trading. But I think that at first when you're starting out, it's good to not necessarily trade with indicators. That way you can kind of understand and see what know what you're looking at. But but at the same token, what I've discovered is there's a lot less brain power once you understand what you're looking at. You can use indicators to help you see what you need to see. So that's what I've discovered. So this is where we're going to go. So how to add indicators to your Thinkorswim. So once you open up this app on Thinkorswim, there's going to be what's called that circle there is it's called a study. And you know what? And I don't know if I should. Yeah, I'll just go ahead. So to add the indicators, it's called that little thing that circle that red on the first phone is called it's like a little funnel or tube or whatnot. And that's where you go to add all of your indicators essentially. And to add indicators, you must tap that screen while on the charts is up. That little white menu will pop up on that left side, and then that's where you click it. You click the flash, and it'll give you the option to search for studies. And I'm gonna give you the recommended studies that I've used on my app. And but these indicators is the one that you're looking for is going to help you get those confirmations that we're referring to that I was talking about earlier. So here's a screenshot of what I'm talking about. You see on the first phone is the little flash. On the second phone, it says it's circled as the studies. So we're going to be looking at the MACD, the RSI, the high and low, simple moving averages, and etc. So RSI, what is RSI? RSI is the relative strength index. Now it shows you if a stock is oversold or overbought based on whatever time frame you're in. I know you mentioned earlier that you watching it from the daily. So time frames they shift based on whether you're watching the 1 minute chart, the 5 minute chart, the daily chart, the weekly chart, the monthly chart, based on what day or based on the time frame you're in. The indicators are shifting and based on your confluences. So the range of the RSI is from 0 to 100, with 30 being oversold and 70 being overbought. Okay, so now that's a key indicator right there for you guys. So now you want to use if you were to use this for an entry or at the bottom or the top of the RSI, you never want to trade when RSI is in the middle because it's not really that predictable. It's kind of like indecisive mode. They haven't, there's no confluence. They're just deciding. So once you get in there, these are the settings that we use. And again, you'll get this presentation, but the settings is 14, 70, and 30. And you can pick your own colors. But on this particular one, if you look onto the right, the oversold is the red solid line right here in the middle. And the overbought is the green solid line. And then that purple line is showing you where it's overbought, right? You see that line, how it goes through the green? It's telling you that's the indicator saying that it's overbought, right? And if it goes above that, then that's a bullish indication. But once it goes below that green line, it's basically selling off, right? And it would be just vice versa if that purple line was hit at the bottom of the red, it will be oversold, or yeah, it'll be oversold. So if that purple line was touching that red line, and if it goes below it, then it's really trending down. But once it start crossing over it and like it's going up towards the green, then it's there. People then that's when buyers are in. And if it's in the middle, it's no trade. It's indecisive. You don't know what's happening. They haven't decided on a price. Now the next indicator is what's called the MACD, the moving average converges. Converges. And it's the one on the top left. Now it shows when the stock is going up or down in price. So the small to big green bars are showing you that it's an uptrend, and the small to big red bars show you that it's a downtrend. Now when the squiggly lines cross each other over the smooth line, so in other words, that yellow line crosses the blue line, it's trending up. And when they cross each other going down, then it's going down. So if you notice, like at the beginning, far left of your screen, the blue and the yellow line, they're crossing up, and then it's those green bars. That's the indication that it's trending up. And then once they cross, you see it starts to turn red, showing you that it's trending down. Okay. Now this usually show you and help you gauge reversals. It's up and now it's reversing in price, or the stock is up, then what's down. So yeah, and these are the settings, the 12, 26, and exponential. And these are the values of once you go into the Thinkorswim app. So once you will see this once it's inside, it doesn't make sense to just tell you. All it means is basically how thick it is. The solid blue, the number 2, that's telling you how thick it is, and the one yellow it's a little bit thinner. So that's what that means. And VWAP. VWAP is the volume weighted average price, right? And so it shows you if the stock is above or below the average price, right? So it shows support when buyers and sellers are higher than usual. It acts as a trading boundary for the stock potential based on whatever time frame you're in. So basically, it's like the midway point. It's once it crosses that volume weighted average price, it's telling you rather it's if it goes above it, it's trending up. If it goes below it, it's trending down. Okay, and it shows the stock. So basically, this screen over here, the lower band, which is that green dash. Once it goes beneath that, it's trending down. It goes above that. The red one is trending up. And we'll go in more detail on this one particularly because there's a better example that I want to show you on how to learn the VWAP. But if you can understand that VWAP is the average price of where the stock is trending, that day or that time frame. And the last one is going to be the adaptive EMA. So EMAs are exponential moving averages. So based on there's different types. There's smooth moving averages. There's exponential moving averages, and moving averages based upon the average. Like let's say there's a 3-day, a 5-day, a 9-day, a 200 moving average. It's based on the average price of the days. So if it's a 3-day moving average, the average price based off the last 3 days. If it was a 21-day moving average, it's the average price of the stock over the last 21 days. So as you can see, seeing above or below the candles determines a strong or up or down candle strength. So if that EMA is trending up and the candles are on top of it, then it's trending up. If the candles are beneath the EMA, and the EMA in this particular picture is that white line, that white thin line, and you can see those green candles that are touching it, that's the EMA. And then once it kind of goes down, those red candles, and it gets beneath it, that stock is trending down. Okay. And this is another confirmation that can help you get in and out of trades quickly and efficiently. And then price oscillator. Price oscillator is just what it is. It just kind of isolates the price. It determines the price trend of the stock. It follows the price of the stock price, determine if it's above or below the average price. And right here at the very bottom left, It's just showing you an example of the price going high and low. If the blue line is above the zero line, it's trending above the average price. If the blue line is below the zero line, it's trending below the price. So this is another confirmation that you can use to confirm primarily indicator signals. And these are the SETIs, the 3, the 5, and 10 exponential. And the price isolator is that blue color. And the yellow line is the zero line. So these are the all of the indicators. These are the simple ones. Like there's hundreds and hundreds and hundreds and hundreds and hundreds and hundreds of indicators. And I just want to kind of show you real quickly a quick overview.